Welcome back. Calls of the day. Royal Caribbean reiterated overweight today at J.P. Morgan. Joe T., you own this one. They see it as best in class.
So I believe they report earnings next week. Look, most of the stocks we're going to talk about in calls of the day, really, the story is about revenue growth. You could have an opinion, you could have a bias, you could have a feel. I did. Royal Caribbean, when Royal Caribbean first went into the ETF, I was skeptical. I said to myself, oh, cruise ships, how much strength can we actually see in terms of the revenue growth? But the revenue growth there is real. They're doing 17% revenue growth in the prior quarter. They're doing 15% revenue growth in the last 8 quarters.
Why is it down 2.5% today?
You've got earnings that are coming up, and I think ahead of earnings, you see a lot of squaring in terms of positioning. I wouldn't read too much into that.
Costco outperformed Bernstein.
Again, where is the revenue growth? This is a consumer staple name. Consumer staple name that over the last 3 years gives you 9% revenue growth. Yep. Very hard to find that type of revenue growth from a company.
You pay up for it, don't you? Right? Weiss's take is it's too expensive.
Yeah, well, it's been too expensive. It's just too expensive for me to buy it.
You make the same claim with Walmart then, because they got the same type of revenue growth.
That's absolutely correct. I mean, I just think they're too expensive. They've executed, so we're just in such. It's a comment on the market, really, is that the focus is on fundamentals. It's not on valuation. Look at 500 stocks like that. But my question is, Joe, what did you say to yourself on this one, since you're talking in the third person today?
So you're talking about execution. This is the interesting thing on a serious note. Both of these companies have the ability to utilize artificial intelligence, and we're beginning to see the early stages of that, where these hyperscalers are able to make the experience better for the consumer with the utilization of the technological
Which goes back to my comment on tools. That's exactly what it is. The tools that Microsoft is giving to them, that Google's giving to them,
but that
is helping their business.
That's just
tech.
Exactly.
Right.
Exactly.
So this is a way to buy part of your portfolio, to build out a staples allocation in your portfolio that is also benefiting from the technological innovation that we're seeing.
Yeah.